Hello, welcome to BADM531 Financial Statement Analysis at Eastern Washington University. This report analyzes financial data obtained from the most recent 10-Ks filed with the SEC for the companies known as Nvidia Corp and Advanced Micro Devices Inc. These companies will be referred to as Nvidia and AMD, referencing their ticker symbols from their respective exchanges. Nvidia's most impressive numbers are the profit margins, which we compare to the industry leader Intel's numbers. The companies are in what's considered the semiconductor industry. Their fiscal years differ by 1 month, with Nvidia's ending in January 2019 and AMD's ending in December 2018. This report will show favorable data that Nvidia manages their company more efficiently, and as a result, their stock is the less risky long-term hold. Nvidia and AMD are both part of the booming semiconductor industry. Investopedia.com says a semiconductor is a physical product usually fabricated from silicone. They help to conduct electricity. These products have various names and uses and can be found in electronics such as smartphones, computers, displays, medical equipment, appliances, and gaming hardware. There are different types of semiconductors such as memory, microprocessors, commodity integrated circuits, and complex SoCs, or system on a chip. To find success in this industry, Investopedia.com says that companies must continue to develop smaller, faster, and cheaper products. The article also says that prices set for semiconductors are very sensitive, and a new product could be developed in months that could lower the price of the current product by as much as 50%. The result creates consistent pressure for chip makers like AMD, Nvidia, and Intel to redefine what state-of-the-art means with every new product release. Nvidia is headquartered in Santa Clara, California. Previously incorporated in California, they reincorporated in Delaware in 1998. Nvidia started by focusing on PC graphics, inventing what's known as the Graphics Processing Unit, or GPU. They have extended their focus recently into the field of artificial intelligence, or AI. Nvidia claims that the core of their developments comes from innovation, and to foster that innovation, they have invested over $17 billion in R&D since their inception. A key industry they are working with is the transportation industry, using Nvidia GPUs and AI to enable autonomous vehicles. Nvidia has two reportable segments defined as GPU and Tegra processor. The GPU segment is broken down into different products for PC gaming to AI science and research. The Tegra processors are used in automotive supercomputers with software enabling the use of self-driving capabilities. Nvidia reviews their expertise as critical in the following markets: gaming, professional visualization, data center, and automotive. Some competitors they list are AMD, Intel, Xilinx Inc., and Ambarella. AMD is headquartered in Santa Clara, California. They were incorporated in Delaware in 1969. AMD makes central processing units, CPUs, and GPUs along with other semiconductor devices. AMD has been creating CPUs for platforms like desktop and notebook PCs. They also manufacture accelerated processing units, which are like SoCs. AMD is competing in the SoC market. An SoC combines a CPU, GPU, memory, and peripheral management into one single microchip, improving energy efficiency and system performance. AMD uses two reportable segments defined as computing and graphics, and enterprise, embedded, and semi-custom. Their computing and graphics, or C&G segment, primarily focuses on consumer notebook and desktop PCs. AMD reports that the C&G segment growth is stabilizing, while certain aspects of the segment are changing, providing new opportunities for the company to capitalize on. Their SoC products are featured in popular electronics like Sony PlayStation 4, Xbox One, and Xbox 360, Nintendo Wii, and Wii U. The competitors they list are Nvidia and Intel. AMD also says their competitors are other suppliers of discrete graphics, embedded graphics processors, and integrated graphics processor chipsets, or IGPs. Both companies utilize a lean strategy of having two reportable business segments. The GPU segment for Nvidia and the C&G segment for AMD are comparable segments. Similarly, Nvidia's Tegra processor segment competes with AMD's Enterprise Embedded and Semi-Custom or EE&C segment. Nvidia relies more heavily on their GPU sales because they are heavily invested in utilizing GPUs with AI. AMD CPUs, a part of their C&G segment, are a stalwart in PCs, both desktop and notebook. They are used as an alternative to Intel. CPUs and GPUs make up most of AMD's C&G segment. While this segment more than doubled for both entities, Nvidia's GPU segment is more than double AMD's C&G segment. We should mention AMD's EE&C segment is larger than Nvidia's Tegra processor segment, but EE&C have only grown nominally, and the Tegra processor segment has almost tripled in size. Growth rates for Nvidia and AMD reveal Nvidia's superior growth. AMD managed an average 7.30% in growth of sales for the analysis period, while Nvidia garnered a larger 27.2% average rate of growth. Nvidia has a higher average rate of growth of net income of 125.7% over the analysis period. Nvidia pays its shareholders dividends, which have increased by an average 13.6% over the analysis period. It should be noted that AMD does not pay dividends due to debt covenants mentioned in the 10K. AMD reports abnormal equity growth compared to other numbers, and this is because they are recovering from periods of financial loss where there was negative shareholder equity. AMD has only recently recovered to a small positive equity position, which balloons their numbers. Common-size financial statements reveal Nvidia is managing its money better. Their cost of sales is less than AMD's. In the most recent year of analysis, their cost of sales is 62.21% of revenue, and Nvidia's is only 38.79%. Nvidia achieves substantially higher gross profit margins. We reported that to compete in the semiconductor industry, you had to constantly create a new definition of state-of-the-art. Both companies embody this aspect, with R&D being approximately 20% or more of revenue. Income from operations is higher for Nvidia at 32.47% of revenue compared to AMD at 6.97% for the same period. Nvidia has minimal cash and cash equivalents on hand for 2 of the reported years because they heavily invest in marketable securities. AMD's balance sheets show that they keep much larger amounts of cash and cash equivalents on hand and have only recently begun to invest in marketable securities. Like the balance sheet, the common-size statements of cash flow display that cash and cash equivalents are much smaller amounts of total cash inflow for Nvidia when compared to AMD. Net cash provided from operating activities is substantially higher for all years reported for Nvidia at 27.99%, 57.12%, 23.41%, and 25.78% and AMD is only at 2.62%, 1.45%, 5.06%, and negative 47.38%, respectively. The high current ratios of Nvidia indicate they are the most liquid company, meaning they will have the easiest time obtaining funding for growth. Nvidia has the larger expected cash flows. Intel is more on par with AMD in terms of liquidity. Nvidia's acid test ratio numbers are better than AMD and Intel's. Nvidia outperforms the industry leader in cash to current liabilities, working capital, and days purchases and accounts payable. AMD has comparable cash to current liabilities when compared to Nvidia, but its working capital is substantially less than both companies. AMD is the most cash-deficient company with a meager 1.94% cash provided by operations to current liabilities. Nvidia reports 302% and Intel reports 170.25% for this metric, respectively. The analysis of capital structure reveals AMD's excessive use of debt funding. Their total liabilities compared to total liabilities and equity has been substantially higher for all years reported. Nvidia's total liabilities were slightly higher in the earlier years of the analysis. It's interesting, AMD's total liabilities of 72.23% and total equity capital of 27.77% for the most recent year reported are almost inverse of what Nvidia's are at 29.22% total liabilities and 70.78% total equity capital. AMD is much more highly leveraged by utilizing a much higher amount of current liabilities at 43.59% compared to Nvidia's 10.24%. AMD utilizes only operating leases. AMD's total debt ratios are more than double Nvidia's for every year reported. AMD has extremely large long-term debt to equity amounts. Nvidia outperforms AMD in equity to total debt with an impressive 2.42 compared to AMD's meager 0.38. AMD has current liabilities of 0.60 for the most current year, while Nvidia is only at 0.35 respectively. It is hard to ascertain accurate comparisons for RNOA, ROCE, ROLTDE, and equity growth rates because AMD was operating for several years at a loss, during which they had negative shareholders' equity. AMD uses significant off-balance sheet financing in the form of operating assets. For these reasons, AMD shows ridiculously good numbers that aren't representative of their current situation. Nvidia has an RNOA of 28.43%, an ROCE of 48.26%, an ROLTDE of 39.84%, and an equity growth rate of 25.04%. There are drastic differences in the number for leverage. Nvidia reports 3.08% compared to 44% for AMD in the most recent period. Comparing how assets are utilized by Nvidia and AMD to an industry leader like Intel highlights each company's efficiency in this area. In sales to cash and cash equivalents, Nvidia's 14.98 is performing close to the industry leader Intel at 17.16. AMD is only at 6.01. Intel and Nvidia both invest heavily with their free cash flow. Nvidia has a much lower sales to working capital than both Intel and AMD. Nvidia has a larger relative amount of working capital. AMD shows better number for sales to fixed assets, sales to other assets, and sales to total assets because of their excessive use of operating leases. Nvidia's number for sales to short-term liabilities are much better than in AMD and Intel. Nvidia has some impressive gross profit margins which maintained while more than doubling sales. AMD's 27% gross profit margin in the first year of analysis represents less than half of Nvidia's 56%. Nvidia vastly outperforms AMD in this area. Nvidia's numbers indicate that it is managing its cost of sales better than AMD. In the most recent years reported, Nvidia has an operating and net profit margin of 32.47 and 35.34 that is on par with Intel's 30.62 and 29.25. In these areas, AMD once again shows their poor management skills with only 6.97% and 5.20%. AMD's low operating profit margin indicates their operating expenses and cost of sales are poorly managed. EPS for Nvidia has consistently increased by a substantial amount for every year reported. AMD has only grown EPS by a nominal amount. Nvidia has a superior PE ratio at only 21.25 to 55.88. AMD does not pay shareholders a dividend. The fact that dividends are paid should come into play. Nvidia has been able to increase dividend returns to shareholders every year reported. Nvidia was able to pay dividends in a weaker economy. Nvidia has increased their overall value in market price per share by a substantially larger amount from 26.43 to 144.73, showing the level of confidence the market has in Nvidia. Using the average growth rate, we can project future revenues. These projections reveal impressive operating results if the economy stays strong and the companies continue to grow. Nvidia should grow revenue to $14.903 billion, increasing shareholders' equity from $9.342 billion to $11.883 billion. AMD's revenue should grow to $6.948 billion, increasing shareholders' equity from $1.266 billion to only $1.358 billion. It is clear from our forecast that Nvidia will increase shareholders' equity significantly more than AMD if current growth is maintained. Return on invested capital confirmed the high amounts of leverage AMD is operating with. Analysis of asset utilization revealed that Nvidia was operating at nearly the same levels as industry leader Intel. Nvidia has superior gross operating and net profit margins, demonstrating their greater ability to manage cash and expenses. Nvidia's PE ratio, along with the continually growing EPS, is more favorable. EPS is substantially larger for Nvidia. The facts illustrated in this video highlight Nvidia's superior management expertise. This expertise translates into higher quality earnings from Nvidia. AMD does not report having licenses with Sony or Microsoft for future developments, which adds to AMD's risk profile. Nvidia performs very closely to industry leader Intel, demonstrating that it has the greater long-term potential. It is for all these reasons presented that I conclude Nvidia is the less risky long-term hold. AMD may prove to be a great short-term trade, but they are the riskier long-term hold because of their dependence on key customers. Thanks for watching my video. Have a great day.